So today I'm going to be talking about investment philosophy and why you shouldn't just be biased into looking at track record when analysing and looking for an investment slash fund manager. So it's something that Monish Pabrai touched on. For those of you who don't know who Monish Pabrai is, he's labelled as a super investor. He is a value investor who has learned under Warren Buffett and Charlie Munger. He runs his own fund as well, averaged about 20% compounded historically. So something he's mentioned as well is if you wanted to analyse and look for an investor, what are some of the things you should consider? Well, he started with saying, is one of the things you shouldn't consider is the fact that if you look at historic track record and how they're doing currently within the last year or two, this isn't going to be reflective of how they'll do going forwards, particularly as quite a lot of the quarter worst percentile performing managers often end up becoming the best managers often end up falling into this category for a year or two over like a decade that spanned. And something he's touched on is the fact that you should rather focus on the investment philosophy behind the management running the fund. So they sort of value orientated. Is there something there that you can understand and get behind? And I just wanted to add a bit more onto that because I feel like if you just solely focus on the performance, pretty much every fund manager has their ups and downs. They have periods where, for example, their investing style may be out of favor, just because the market's going through its usual rotation. So like you'll see during certain time periods that tech companies are favored more, whereas in other time periods you have growth companies less favored, and it's sort of like the consumer staples and sort of defensive, traditionally dividend sort of paying companies are in favor. So it's just really understanding those dynamics. And if you solely invested based on past performance and didn't really understand their investment philosophy, what will likely occur is during one of those periods, you're most likely to sell it at the low. You're most likely to sell your investment in the management firm at the low and not really see the benefits of those highs. So I feel like if you do end up opting for one that has performed historically well, of course, a track record is valuable, particularly if it spans over a longer period of time, and that's something I'm looking to build up myself. I do believe that you should be also taking into account management philosophy. And is there a specific reason? Because oftentimes you may see that more growth orientated portfolios such as Cathy Wood's, she with her ARK Invest, she has done tremendously well over, call it a decade, 2 decades. But if you just looked at the period between, call it 22 to 23, when tech stocks and innovation related stocks sort of started falling out of favor, then you would have just assessed her as a bad fund manager, when actually if you look at the long-term horizon, she's done quite well. And you may see, well, actually some of these value investors aren't doing as well when the S&P's up 30% or 20